Hey money movers! Welcome back to the channel where we break down the financial world to help you make smart, informed decisions. Today's topic is hot. President Trump's recent speech and policy announcements have sent shockwaves through the markets. We're going to break down what's happening in the stock market, housing market, bond market, and more. Stick around until the end, where I'll explain real-world actions you can take and give you some insider strategies. And don't forget to subscribe to Money Moves for your daily dose of financial empowerment. The stock market, volatility and opportunity. Trump's recent speech focused heavily on trade, infrastructure, and tariffs, three words that can either send stocks soaring or crashing. Here's what you need to know. Key policies. Potential reintroduction of tariffs on foreign goods to protect American jobs. Strong emphasis on investing in American infrastructure and energy. Market reaction. Tech stocks dipped as companies reliant on global supply chains were hit with uncertainty. Infrastructure and defense stocks surged as government contracts could be in play. Real-world example 1. You've got money in Apple or Nvidia. Watch out, if tariffs increase costs for key components from overseas, margins could shrink. On the flip side, if you've invested in Caterpillar or Raytheon, you could see a boost as the government pumps money into roads, defense, and factories. Pro tip. A lot of investors panic sell during uncertain times, but here's the play. Hold your long-term winners. In fact, a market dip could be a buying opportunity for solid companies that will bounce back once the dust settles. Subscribe to Money Moves for more insights like this. So the housing market, is a crash coming or a boom? Trump's policies often shake up the real estate world, and his recent comments on boosting Made in America initiatives have implications for housing construction and affordability. Potential impacts. 1. Higher construction costs. New tariffs on imported building materials could drive up the cost of new homes. 2. Increased demand for rentals. Rising home prices might push potential buyers into renting. Real-world example. 2. You're in Los Angeles or San Diego, already dealing with high home prices. If materials like lumber and steel become more expensive, expect those prices to climb even higher. But if you're renting out a property, like your rental home in Los Angeles, this could actually increase demand for rentals, giving you the upper hand as a landlord. 3. The bond market, safe haven or a trap. Government policies can also shake up the bond market. Trump hinted at significant government borrowing for infrastructure projects, which could increase Treasury yields. More borrowing means the government issues more bonds, potentially pushing up interest rates. Higher interest rates usually drive bond prices down. If you've got money in a bond-heavy portfolio like some TSP funds, it's time to check how sensitive they are to interest rate changes. A rise in rates can eat away at your returns, but if you're close to retirement and rely on bonds for stability, consider shorter-term bonds that are less affected by these shifts. 4. Currency markets. What's happening to the dollar? The dollar's value fluctuates depending on trade agreements and economic stability. Trump's speech signaled a return to protectionist policies which could weaken the dollar in the short term. Thinking of investing in international ETFs or planning a trip to Europe? A weaker dollar means those euros will cost you more. However, a weaker dollar can boost U.S. exports, making American-made goods cheaper abroad. 5. Consumer goods, how it affects your wallet. When tariffs go up, the price of consumer goods often follows. This affects everything from the cost of groceries to electronics. Imagine you're heading to Best Buy for a new laptop. If tariffs increase, you could see a $1,000 laptop jump to $1,200 or more. The same goes for everyday items. Your grocery bill could creep up due to higher import costs on essentials like coffee or fruit. 6. Real estate investors, time to make your move. If you're a real estate investor, like with your rental property in Los Angeles, this could be your time to shine. Tariffs and higher rates may scare some buyers off, but investors who play their cards right can buy properties in undervalued markets and take advantage of higher rental demand. Pro tip: cash-flowing properties in cities with strong job markets like Phoenix or Austin can be gold mines. And if you have the equity and the pension stability you've built, you can position yourself to grow your portfolio even further. If you're still with me, remember this. The key to wealth building is being proactive, not reactive. President Trump's speech may bring uncertainty, but for smart investors, uncertainty equals opportunity. Hit that subscribe button for weekly financial insights that help you make money moves. And if you're ready to dive deeper, join our newsletter, link in the description. Final words, what should you do now? 1. Stock market. Look for buying opportunities in solid companies during market dips. 2. Real estate. Consider leveraging your equity for new investment properties while monitoring interest rates. 3. TSP and bonds. Adjust your portfolio if needed to protect against rate hikes. 4. Stay informed. Policy changes happen fast, so stay ahead by tuning in to Money Moves. Thank you for watching. Don't forget to like, share, and subscribe. The markets move fast, and so should you. Keep making those money moves.